The Eurozone crisis continues to dominate the market's attention, but what's in store for the markets next week? Paul Bloxham is HSBC's Sydney-based Chief Economist for Australia and New Zealand, although he joins me now on the phone from New York. Hi Paul. Now, alongside political tension and uncertainty within the Eurozone, what else do you see having the potential to cause a stir in the financial markets next week?
Well, next week we get the HSBC preliminary PMI for May. Around the middle of the week, which will be, I think, a key watch point for those people concerned about growth in China at the moment. Of course, we know that the Chinese economy has been slowing in the first half of this year, and the question people are asking is whether we'll see a pickup in growth in the second half. So there'll be keen interest in watching that particular indicator to see whether there are any signs that things are improving.
The Eurozone seems to be behaving almost like a dysfunctional family. Now, the thing is, European officials obviously have to find a way to defuse the crisis, but how? Where from here, do you think, Paul?
I think this is a monstrous problem, really, for the euro, because for the European authorities, because the euro isn't an optimal currency area, so they do have a lot of challenges ahead of them. They share monetary policy, they share a currency, but at this stage they don't have coordinated fiscal policy, and of course that's been the key problem that they've got. I think the big issue here really is sharing the burden, is working out who is going to take the burden of the previous debts that have been run up. At this stage, the bulk of that has been pushed upon the peripheral countries, of course, Greece being central to that, but Spain as well, and Portugal, as well as Italy. And I think a lot more of it's going to still have to be shared and pushed back towards the poor countries before this is over.
Data coming out of the UK next week is expected to reveal sluggish growth and high inflation. Now, even though the Bank of England has revised down forecasts for growth, do you think they still might be being a little bit too optimistic? And maybe not now, but do you think they might start back up the money printing press later on this year?
There's certainly a risk of that. The UK faces some enormous challenges of its own, but also the fact that, of course, its major trading partner is Europe, and Europe is in recession at the moment. So it's certainly quite possible that we will need to see that the Bank of England needs to take further action, further unconventional monetary policy action in order to provide support for the economy.
When looking ahead for the US in terms of its economy and fiscal policy, it seems like the US faces a fiscal cliff in 2013. But what about its immediate cost to the economy, and how exactly will it impact growth?
Well, I think we're already seeing the impact of fiscal unwind in the US in terms of holding back growth prospects. So our own view is that growth will be similar this year to last year, which is to say that it will only be fairly modest in the scheme of things. That reflects both the fact that the government is winding back its fiscal position, and that's a drag on growth. Of course, that households are deleveraging at the same time, and that the major trading partner of the US, that is Europe, is in recession. So that's not particularly good for the traded sector either. So overall, that fiscal unwind is a big part of the slow growth story in the US.
Now, there's also rumours that the Bank of Japan may also cut its interest rates when it meets next week. Is this in line with your expectations?
The Bank of Japan has recently introduced an inflation target, and we've seen a number of actions in recent months that have meant that they've put more assets on their balance sheets, more quantitative easing, in order to try and push up their economy and try to achieve that inflation target. So there certainly is a good chance that we might see more action in that sort of direction next week.
To end, Paul, as I also know this is where your speciality lies, the Reserve Bank of New Zealand are expected to publish their inflation expectations next week. Now, besides that, the New Zealand dollar has also fallen to a 5-month low against the US dollar amid Greek political impasse. So what's in store for the Kiwi dollar and New Zealand economy for the remainder of 2012?
Well, we were of the view when the New Zealand dollar was up around 82 cents against the US that it was too high, and so the recent depreciation we've seen, we think, brings it more into line with fundamentals. Certainly, the RBNZ has been very concerned about the high level of the New Zealand dollar, and so that depreciation is probably making them a bit more comfortable. They don't really have inflation problems in New Zealand at the moment, and we think the RBNZ will be on hold for the rest of this year. But looking forward into the next year, into 2013, the key story will be the rebuild of the Canterbury region after those earthquakes that happened a couple of years ago. And of course, that will start to see some growth and a pickup in inflation into 2013.
Paul, some great comment there on what market players should be keeping a close eye on next week. Thank you very much again. Now, that's all for now on DukascopyTV, but tune back in on Monday for more news and updates. Have a great weekend, viewers. Goodbye for now.